And welcome to another episode of Poor vs. Standard. As always, we are not financial advisors, so any information within these podcasts, TikToks, Twitters, whatever social media you're viewing anything of ours on, is for entertainment purposes and educational purposes only. So please don't sue us. Don't do it. And with that, if you find any type of, benefit to the content we provide, feel free to like us on YouTube, rate us on wherever you're finding a podcast, or if you really feel so moved, you could always join us on Patreon at patreon.com/poorvstandard in the episode notes, or sign up for one of the services like M1 Finance or Webull with our link, and that'll help out too. So let's get into it. So first up, we have the portfolio. As you can see with the portfolio, we have kind of limited our positions a little bit since the beginning of the month. Still trying to pare down. We have bought a lot more when things were on sale. We bought some Tattooed Chef. We bought some Palantir. We bought some Corsair. We bought some Avant brands when they were down. And today, actually, I don't have an article pulled up on it, but there's a GOP bill that was presented to the House to make basically federally legalize MJ, as it were. So that's why Planet 13 and Avant brands were both up a pretty decent clip today. Yeah. Amazon's doing its thing, just hanging out in the 3,500 range. AMC was up in the 42 range, up about 6%. That's pretty good. Palantir up 2%. Smile Direct Club down, which is okay. We have calls that we bought. We're a little underwater on, but they're so far out. They're leap calls, so we've got a couple years on those. It's not a problem. I'm not worried about that. Might buy more shares around this $4 range. That's absolutely fine. And maybe even sell a put or two around this $4 range. We'll see. Feeling cute. Might delete later. And Tattooed Chef, down in the $16 range. Are you insane? This is nuts, the valuation on this. And I understand they canceled their conference call for their quarterly earnings. But there's only so many reasons you would do that, and none of them really scream out this valuation to me. It's something about either they didn't have the right numbers ready because they're such a new company as far as reporting and things like that, so they may not have had all their ducks lined up in a row. It could be that they were going to be under-reporting and they wanted fresh numbers that were coming in, or it could be something as simple as, Jeremy on Financial Education said, like a death in the family of someone and they just couldn't do it, or COVID-related. Nobody knows. Not until they give their report and explain what happened. But I still like the company. They, fundamentally speaking, aren't the different company for having missed their call. It is unusual, I'll give you that. And that will instill some, fear into the stock, which is a great opportunity to buy. So I can't recommend Tattooed Chef enough right now. As far as the buying opportunity at $16.39, holy cow. Absolutely. And one that's really been kicking ass for us lately is Voyager Digital. Just wow. We bought it. What is this? This is 3 years. So let's take it down to the last 6 months. Okay. So it was recently, as recently as last month, October. It was down in the 8-9 range, and we bought up a bunch of them around that $9-10 range. And it hit 20, and now it's back corrected down to 18. So this is probably the correction before the next leg up, if I had to guess. Voyager Digital has a lot of things going for it. A lot of people from E-Trade and things like that are part of the board, so they probably want to get into the stock market and things like that. And it's, again, a great company if you like crypto, that kind of thing, and you want to own, something that isn't crypto but crypto related. This, Mara, Riot, all good bets. But yeah. And our Walgreens call that we have is it's okay. We did do a poor man's covered call on it. I actually almost forgot about where we have this long leap for $50 and we sold a $53 call that expires at the end of this week. Walgreens hasn't really broken out into that range, and we sold it for roughly like $50, something like that, 50, $60. So we're collecting that premium for like a 2-week time frame, and we might do that again and again and again to reduce our premium on this, because we spent, I don't know if you can see it, but we spent around $1,000, so 1,020, so $510 per call, and we're underwater on it by, since we opened it, $15 we're underwater. But we're making up for that with this sold call against that. So if this did go above 53, we would have to sell, and then we'd be out a little bit of money, but not a whole lot. But yeah, there's that. So I like doing these poor man's covered calls. Ideally, I'd like to do them a little further out of the money, because when this does take off, it's going to take off pretty rapidly. And that's why I'm only selling the one call. That way I still have one to back up. So, that's the way we're doing things. And yeah, it's making our cost basis for these other ones a lot lower, and that's perfectly fine with me. I do have some stocks that I'm looking into that I'm going to give to the Patreons before I give you guys anything, just to be fair. But full disclosure, there's a not a brand new sector, but a sector that I've been looking into more and more. And it's not, cars, it's not food related, it's not electric vehicles, but it is a futuristic kind of deal. And I will get more into that probably in the next couple episodes, but I wanted a shot to give the patrons and those who support us that way a crack at it first, because they're, helping us out. So I want to try and help them out first. Not saying that it's, I'm not trying to put everything behind a paywall. I'm just saying that this is new content, new thing. And I want to make sure they get the opportunity first, because they've been so helpful to us, and I want to support that. So that's coming down the pike for patrons. So thank you very much, patrons. So let's get into crypto. The crypto market's been on fire, and there's two schools of thought right now. The first school is that it's very possible we could see a correction all the way down into the 40s or high 30s for Bitcoin in the next month or so. And if we do that, I will absolutely be buying a boatload. I will be backing up the train. Yeah. The other thought is that it's going to hit somewhere close to 90,000 by the end of the year. I know which camp I prefer to be in, but whether or not, it's a guess at this point. I think long term, holding Bitcoin is definitely going to be the way to go. And the cool thing that just happened is Bitcoin just had an upgrade go into place called Taproot, which essentially allows Bitcoin to do smart contracts and things that Ethereum does. Now, a lot of complaints have been going on about Ethereum because of the gas costs to operate any type of, app or anything like that. The gas costs for these smart contracts and things are getting astronomical. You want to send $10 to someone for an app or something, it's like $200 gas fees and things like that. It's getting nuts. Because of all the infrastructure that's built on Ethereum. Now, Cardano, I just read an article that they had double the traffic of the Ethereum network as of this last week, which is a most impressive feat, making it the second most used blockchain of all blockchain technology as far as cryptos. And all of these things are kind of coming into play at the same time, and it's very interesting because you should be seeing Bitcoin rise with the news of this Taproot. Here, I'll show you the article I found. It's the first one in 4 years, and it will allow smart contracts. And, essentially, like, you want to buy a house and you don't want to pay a realtor or anything. You can do all of this electronically through the Bitcoin market system. And then it's basically a contract between two parties. So you don't have a third party like a bank or something getting in the way. So it's cheaper for everyone and it's more efficient. and it's like a viable ledger for the public to see. Like, I sold this asset to him for this price. There's everything laid out in the public ledger, and that's a beautiful thing. And I think as soon as this goes, like, I mean, this was released yesterday, Sunday, today being Monday. So this news should be, fairly well known in the circles that need to know it. But yeah, right now we have Bitcoin at 63, almost 64,000. Ethereum's at 4,500. Cardano down at 202. I really like Cardano at the prices right around that $2 mark. Dogecoin 25, almost 26. SHIB quad 0538. And I'm covering these because people like them. I don't own any Doge or SHIB. That's me. I do own a couple DOT. It's actually down from where I bought it. I bought it at 46. It was up in the 52s. But now it's down actually quite a bit. Might be a good entry point for Polkadot. And then the other one that I recently bought, maybe a month or so ago, is Anchor, ANKR. And I bought this when it was about 8 cents, I want to say. Currently, it's up to 13. It was up to 14 earlier today. It's like 13 and a half cents. So I own quite a bit because I've been putting a couple $100 in every couple weeks. But yeah, not a bad gig for Anchor. But I'm not going to get into the backstories of all these cryptos and what they do. If you're interested in them, shoot me a question. I'll be happy to answer it, or just look it up yourself. It's always an option too. You can Google as well as anyone else. I know you can. So crypto. I mean, that's the big news is the Taproot, Ethereum gas prices, Cardano fighting those gas prices, and I believe there is going to be the Sunday swap on the Cardano network where you can basically swap tokens and things. It's a very interesting infrastructure that they're putting up to Cardano. And these kinds of things do tend to lead to price increases. So you should watch for a massive jump in Bitcoin, Cardano, and that kind of thing. Ethereum might actually take a hit, and because there's a lot more stiff competition for that space right now. So that'll be interesting to watch. All right. So with those things out of the way, I did want to talk about, it's the holidays coming up and certain things that you need to maybe watch out for or take with a grain of salt. So this article I came across, Peabody Judge, who's the transportation secretary for the Biden administration, basically saying that there's going to be supply chain disruptions because he can't do his job. And it's painfully obvious this guy has like no business being the Department of Transportation secretary. I mean, he was a mayor of a town in California that had nasty potholes that he would never fix. He went on paternity leave, which, that's your right as a, working U.S. citizen, but he went in the middle of a supply chain crisis, and you're the transportation secretary for the U.S. You think that maybe the optics on that would be real bad. You should probably not do that if that's your job. And, you had one job. You're going to take off 2 months in the middle of what you should be dealing with. And now you're telling us on the back end of those 2 months that you were off. Well, I couldn't get ahead of it, and so now there's going to be problems. Like, I don't trust this guy as far as I can throw him. He's not doing a good job, as it were. There's lots of things that could be done if he only talked to the right people, but he's decided to say, well, just throw my hands in the air, and it'll be. Now, this on top of the fact that we just got signed into law from the desk of Joe Biden, the $1.75 trillion proposal that passed the House last week for the infrastructure bill, which will put a lot of money into transportation, broadband utilities, which is great, absolutely great. I'm going to put EV stations up where people can charge Fantastic. You're going to put up a lot more, utility lines as far as cables. So everyone, even in the boonies and stuff, can get cable from fiber, upgrade to that, or because why go to cable, which is an outdated technology at this point when you can do fiber, that would just make more sense. Future proof the entirety of the US. If you're going to spend that kind of money, do it once and do it right. But that's usually not how these things are done. For example, why would we keep doing this stupid thing with these highways where we only put about 3 inches of pavement down, whereas the Autobahn in Germany is 24 inches thick and it never needs road work? Could you imagine if all of our highways were 24 inches thick? The upfront cost be about twice as much as what they pay in a year. But you would never have to worry about them almost ever again. They don't do it because of lobbyists, and I really hate lobbyists because they do this stupid shit where they're like, well, we got to make sure that we do the construction this way so that our construction workers have jobs. Having jobs is good, but doing the same shit repeatedly over and over is the definition of insanity because you're expecting a different result, or you don't want a different result. You don't want that to change because you know that it's basically lining the pockets of certain people. That's corruption. That's not okay. And I don't care what side of the aisle you sit on, both parties are responsible for that shit. So that's got to stop. And I hate lobbyists. No one in their right mind likes lobbyists because it's basically saying that, hey, here's a guy, he's going to put money into your campaign so long as you put this in the next bill that you vote on. Or you're going to, sign off on this for this state. Make sure that this happens in this state because we want it to happen because we have the money and we're going to feed your campaign dollars. Lobbyists are the devil. That's all there is to it. But that's, I've gotten a little off topic. So, like or hate Biden, I'm very hopeful that this $1.75 trillion proposal that did pass, which was one of 2 bills that they decoupled, this is the actual hard infrastructure bill, whereas the social infrastructure bill is held up in the Senate and may not pass at all. So we'll see. But this one was the hard infrastructure. So roads, bridges, internet, that kind of thing. I have my doubts, but if this actually does what it should do, which is improve the infrastructure of the United States, which isn't all that bad compared to a lot of countries. But if this does that, then that's a good use of money because it's taxpayer money, taxpayer funded projects for taxpayers. And that I can get behind. If this is basically just a money grab and all this money is going to go to stupid little projects here and there or basically paying off cronies and things like that because this is a lot of money. So we're just going to start feeding it to these people who agree with us, and that's not okay. Like, we're going to give this to this union, we're going to give this to this union, we're going to give this to the no, that's not what this is supposed to do. And if that's what happens, I will be not surprised but disappointed. But yeah, so between those kind of stories, that's what's happened in the last 48 to 72 hours. And there was another thing that we noticed, and there's actually, I don't know if I told you guys last week, but Standard did a TikTok on it, and basically he took the M2 real money supply and he divided it by the S&P 500, and he found that the last time that the M2 money supply ratio to the S&P was this low was in May of 2000, which was the height of the dot-com bubble just as it started to crash. So there are some indicators you can find that will tell you what you want to know. Well, they'll tell you things that you think, history repeats itself. So be on the lookout. And there's a lot of people that are saying, Evergrande that just happened to default on its it's going bankrupt and all that is the start of another housing 2008 crash. Maybe it is, maybe it's not. I know that my thoughts on that are that it may affect China a hell of a lot, but the companies that own Evergrande over here, it's a very small percentage of their portfolio, as it should be, because if you're a US based company and your majority holdings are in Chinese stocks that you don't actually own, you just own a thing saying that, okay, well, this is a placeholder for that actual stock because we're not going to sell you that stock. We're just say you own it. And it's like 3 layers deep and you're never going to get reimbursed when they go bankrupt. That's problematic if you're a US EFT or company of that nature. So to be diversified, you don't want a lot of companies that you don't actually own in that portfolio. You want to have companies that you actually own, companies that you can influence, companies that if you're that big, like the BlackRocks, the Vanguards, the people who own everything, you can persuade them because you're an actual shareholder. You own X amount of dollars in a company. You expect certain things. I mean, there was the one guy who owned so much Disney stock that he said, I think you guys need to get away from dividends and I think you need to place it in growth. And Disney took his advice because he had so many shares. They're like, okay, yeah, we'll use it to develop the online, not so much the parks, but the online presence so we can compete with Netflix and things. And Disney stock took off because of that. So there are people out there who, have been around the block, and they know a thing or two because they've seen a thing or two. Dum, 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 dum. But yeah, and it's things like that you want to look out for and want to make sure that you're familiar with people who own 10% of a company, because those are the people that are going to be making decisions on behest of that company. Like Tattooed Chef, majority of the shares are owned by the CEO and the board. Like they own 50% of the shares that are owned by the top 7 stockholders. So they're going to make those decisions accordingly because they own the most stock and they want to see it do well. And so if the CEO owns like 38% of the company, he wants to make sure that that company thrives. So hopefully that covers a lot of everything. I think next week we're going to do a 1-year post-pandemic, see where those stocks are that we used to cover all the time, and go from there. But that's pretty much all I got for you this week. If you have any questions or anything, feel free to reach out to us. You can find us at poorvstandard@gmail.com or shoot us a DM or something on Twitter at vs_poor. And as always, we appreciate you. So be well and trade safe. And good night.